I want to talk a little bit more about this relationships between the tables. In our current situation, notice that all the tables here is all about just one stock. We don't have multiple stocks. We just have one particular stock. Okay, for example, Apple, and the balance sheet table is gonna have Apple's balance sheet from a earlier year all the way to say 2024. Okay, and the income statements again is gonna be about Apple from an earlier year to the year 2024. So we just have this. Actually, we just have one dimension, the date dimension here. Okay, one single date will be able to determine a particular row in those tables. You don't need the information about a stock because here we just have one stock. So if we're looking at a particular date, say March 30th, 2023, so that particular date is going to be able to identify a observation or a particular row in all those tables. Okay, that's why just using this date dimension, we can have this one-to-one relationship between the balance sheet and the income statement, or between the balance sheet and this historical daily table. Okay, you can see here's a one-to-one relationship going to the date table, then again a one-to-one relationship going to the balance sheet. Okay, if you want to go to the balance sheet to the income statement, again there's a one-to-one relationship to the date table, and then through a one-to-one relationship you get to the income statement. That's because, okay, this one-to-one relationship is important, and it's there because the date dimension itself will be able to identify a single observation in all these tables. So that's why you can just base your you can just build a one-to-one relationship based on this date field alone. Let's consider a slightly more complicated situation. So instead of just one stock, let's assume all those tables contain two stocks. Okay, we have Apple's income statement from 2020 to 2024, as well as Tesla's income statement from 2020 to 2024. Okay, for this balance sheet table, again, we have both Apple's balance sheet from 2020 to 2024 and Tesla's from 2020 to 2024. So in each of those tables, we are looking at a combination of stocks for a period from 2020 to 2024. All right, in this case, just use the date field alone. We cannot determine or identify a particular observation in that table. Okay, for example, in the income statement, if you're saying I'm trying to find the observation related to September 30th, 2024, okay, you'll find two observations. One is for Apple on September 30th, 2024. The other is for Tesla on September 30th, 2024. You cannot pin down which one it is. Okay, there's two observations, both related to September 30th, 2024. Okay, so that's why I'm saying you cannot just construct a one-to-one relationship based on the date field alone if this table is not going to be identified by the date field alone. All right. In our case here, if we have again two stocks from 2020 to 2024, the only way to identify a single observation in a particular table is to use a combination of the stock symbol and the date field. All right. Using date field alone, as I said, will not identify a single observation. However, if you use the combination of the stock symbol and the date, you'll be able to pin down a particular observation. For example, if you're talking about the stock symbol being Apple and the date being September 30th, 2024, there's just one observation in the income statement that reflects this financial report related to Apple on September 30th, 2024. Okay. Similarly, other tables, balance sheet, cash flow, historical daily, if you're able to tell, okay, I'm trying to look at Tesla on this particular date, say March 31st, 2023, well, these two pieces of information together, okay, symbol combined with the date will help you to pin down that one particular observation in those tables. Okay, so that said, if your table is identified by a combination of date and stock symbol, the only way to construct one-to-one relationships between those tables is to base this relationship by this combination of stock symbol and date. You cannot build one-to-one relationships based on the date field alone if the tables are not just identified by the date field itself. Okay. So in this more complicated case, assuming again you have two stocks, okay, for each stock you have the reports from 2020 to 2024, and you want to construct a one-to-one relationship among those tables, okay, a kind of suggested approach is to construct a new data field or a new column in those tables, okay. Instead of just using date, you now need to construct a new column that's called symbol dash date, okay. So this new column is a combination of the symbol of the stock and the date you are interested. Okay, so for example, Apple dash, okay, AAPL dash 2023 December 31st. Okay, so this whole piece of information will be able to identify a single observation in those tables. So you need to construct a new column combining both the stock symbol and the particular date you are trying to look at. And with this new column, combining both stock symbol and the date, you will be able to identify a single observation in those tables, and then this one-to-one relationship can be constructed based on this new column called symbol dash date. Okay, that's a little bit more complicated situation, but I just want to introduce you to this idea of one-to-one relationship. Okay, one-to-one relationship is not possible unless you have a data field that can identify a single observation in those tables you try to connect.